Well, the market's had a pretty bad day today, and that includes AMC. I want to go over what happened today, cover my day trades, GME, SPY, IWM, and talk about how big the market correction could be. So, let's pull up the charts. This is my day trading chart on the 1 minute time frame. You can see that right off the bat. I actually entered into some puts. I know I said I wasn't going to trade anymore, not day trade at least. But hey, here I am day trading. Woohoo! So I got the top of the open there and rode that put down. Entered an OTM, a very deep out of the money put. And when I saw the price decline only a little bit before stopping, I actually closed that at a small profit. Just cost the fees there to trade that. Then we started an uptrend, which to me looks a lot like a corrective phase and a measured move down. The price did fail to close back above that trend at the end of the day, so that is bearish. I did enter into a couple of 1150 puts expiring this Friday. I am holding those positions, and I do that because on the weekly time frame, I think we actually have a bearish pattern. Let me turn on a weekly time scale here and change my drawing set, because this drawing set doesn't make any sense. Let's go to the trend line study. This is a great chart. You can see that I have here well, there's a doji here, and this is actually not necessarily that bullish. Bulkowski covers that on his webpage, patternsight.com. I haven't pulled up above me. The Bulkowski on the bullish doji star candle pattern, he says that it's supposed to be a bullish reversal, but it actually performs as a bearish continuation 64% of the time, and that is pretty accurate. So here we have, starting the week on a red day, testing this uptrend. I'm gonna turn on the daily time frame now. It's gonna look a little better. And zooming back in, you can see we still are in this massive decline, this massive downtrend from 72, the all-time high. And I think what we're going to see is this big measured move down to break this uptrend and land us near $10 or test that 970 level. And I said that I'd be bearish if we got past this low here at 1177, and guess what? We did. So that's all there is to it. It's time for me to flip bearish and start trading to the downside, and that's why I'm holding puts. Now this trend line, this uptrend did offer support, but it was on pretty light volume. You can see that the RSI is starting to move down towards oversold. Volume was well below the 30-period average, and implied volatility is rising on the downtrend. This looks bearish to me. So let's go ahead and have a look at GameStop next. I don't cover GameStop in as much detail, but you can see that it has lost its flag, or pennant, whatever you want to call it. It's lost it, so we're probably going to be heading lower. Implied volatility rising, and volume below the 30-period average. RSI is heading down. Going into the ETFs, SPY first. This is nuts. This is nuts. This kind of gapping down for 3 consecutive trading sessions is a big deal, and I haven't seen this. I went back in the charts back 2001, 2008. I didn't see a drop quite like this. This is incredible, on a rising volume trend nonetheless. You can see that we are now up well above the 30-period average. RSI is coming straight down at a very even pace, and implied volatility is now coming up as the price declines. And going into the IWM ETF, we're going to look at this as well. It's similar. It's more or less the same, and you can see we're about to test that bottom, coming in for new lows, and volume here is also increasing and above the 30-period average. RSI is moving down at a very steady pace, and implied volatility is increasing in the downtrend. So it's going to be scary. It's going to be scary. And I'm going to open up SPX and open up a monthly chart really quick. If you didn't watch yesterday's video, there's some, audio-visual delay. It's a problem. Let me just show you what I'm looking at here. So this is a super cycle from the Great Depression all the way to the top that we recently had. And there's 2 corrective phases here, and they are shown in broadening patterns. This is a megaphone or reverse triangle, and here we have a right angled and broadening descending formation. And recently we found ourselves in a high off of a 5 wave, so we're coming for correction now. But the question is, how far are we going to go, and is this actually a super cycle correction? Because if it is a super cycle correction, it's very possible that we come back down, way back down to the levels of this corrective phase 4, which would feel bad because that's near 15 to 1600. I'm talking about a 50 to a 60% correction in the S&P 500 index. And hey, if that's limited because to a few, okay, let's talk about this. The value in the equities markets is probably consolidated into larger companies than in previous times. We've seen that a lack of competition created very fragile and unsustainable supply chains, and those supply chains have led to some inflation. And if those same companies lose their their value in their stocks and they actually go and bust, that could be good. It could be good because the economy will be healthy thereafter. Like a run, you go running, you are exhausted, you collapse, but afterwards you feel great. This is the kind of thing that the economy does too. And it's possible to make money in the downtrend. It's very possible to make money in the downtrend. That's what I'm gonna do. I'm not scared because I know how to make money in this kind of environment. In fact, the faster and the harder that the stock market drops, the easier it's going to be to make money to the downside. You can buy deeper out of the money options. With higher vega, your returns will be better. But that's only if it's fast and hard. And when the market does drop fast and hard, the bounce is also spectacular. For the time being, it's going to be like dump time. It's going to be dump time. I mean, we're at least going to come down here to the 50% retracement from the COVID crash low near 3,500. So overall, that's what I have for today's video. It's going to be scary moving forward, and I'm going to be making money on the downtrend. Honestly, not afraid. I think we're going to be just fine. It's about this time when we start entering corrective phases that conspiracy theories and apocalypse scenarios start to come up a lot, like in 2001 and in 2008, which were the corrective phases of the super cycle or of the cycle waves. So if we're going to go into a super cycle corrective wave, I imagine that's also going to be pretty intense. Social media is going to be flooded with apocalyptic and doomsday scenarios, but the analysis supports a 50 to 60% retracement in a healthy market, in a healthy, growing economy, which is crazy, right? Sometimes things got to go down before they can go up, and that's where we're at now. With that, I'm going to sign off. Happy trading.